All right, welcome back, folks, to another episode of Nadlin Forum Podcast Daily. I'm Ruby Sturt, still rocking the Aussie accent, and joining me as always is Lior, our resident New York Israeli property guru. Lior, how's your week going?
Hey Ruby, busy as ever, and honestly a little relieved. The chaos we saw a year or two ago is finally calming down, which, is what we're diving into today. Buyers are back in the driver's seat, huh?
Yeah, isn't that wild? I feel like things flipped kind of suddenly. So, for everyone listening, Redfin's latest data shows some big changes. Less than 26% of homes sold above list price last month. Just a year ago, that was almost 29%. Now it's dropped to the lowest September pace since 2016. The fever's broken, right?
Totally. And it's not just more homes for sale. It's also that they're sitting on the market longer, right? The typical home that went under contract in September took like 50 days. Slowest September in years. Which gives buyers, I think, a feeling they can finally negotiate.
Exactly. Actually reminds me, my cousin just bought a place in Sydney and she was bracing for this massive battle, like bidding $80,000 over asking or whatever, and it just didn't happen. The market's slower, the energy's just totally changed. Since even 2021, she had time to actually think. And it sounds like that's happening in the US too?
Yeah, it is. But the funny part is, buyers now remember being approved for those super low 3% mortgages in the pandemic, and their hearts are still set on what their budgets were back then, even if reality is different today. Like, sorry, you want a house you saw at $450K? Now you're looking at $325K max. There's a disconnect, but at least they feel less rushed.
And sellers apparently are having to rethink everything. No more list high and wait for magic. It's more like, if you're not aggressive about price, no one even looks at your house. Gotta strike while the iron's, lukewarm.
Huh? Exactly. Aggressive pricing, being visible, it's all shifting. If you price too high, you just end up forgotten until you have to slash the price months later. We're seeing buyers walk back in with confidence. Maybe some unrealistic hopes, but definitely more power than before.
It's not playing out the same everywhere, though. This is what I find so fascinating. Some regions are heating up while others are cooling off hard. Like the Midwest, Milwaukee, Detroit, Cleveland, all saw real price jumps since last year. Milwaukee was up, over 9%? That's a lot.
Yeah, and you got Texas on the flip side. Austin, Dallas, Houston, they're seeing price drops. I think Dallas was down almost 3% year over year. The country's really splitting into winners and losers right now. And honestly, as someone who invests between New York and some of these Midwest cities, I'm paying a lot more attention to places like Milwaukee or even Detroit for new opportunities.
Yeah, that's smart. And then you look at pending sales growth. San Francisco and West Palm Beach are leading the charge there. Whereas places like Denver and Houston, the numbers are in steep decline. And the inventory is wild in some markets. Washington, D.C. saw a 21% jump in active listings. Vegas and Seattle too. Only San Fran and San Jose are seeing fewer homes on the market right now. It's like a chessboard.
It's a crazy patchwork. Even in New York, you're seeing pockets with inventory surges. For investors, it's about catching those shifts early. Like, I'll run numbers on a Midwest metro I would have ignored a year ago because suddenly it's outperforming big cities. The more competitive coastal markets might see activity, but they're not all going up in value. Some listings there are seeing big price cuts despite high sales volume.
We saw this before. In earlier episodes, we talked about how migration and remote work were shifting regional strengths, right? Now it feels like, if you blink, the map has changed again. You can't make the same blanket assumptions as before.
Yeah, and for sellers in those cooling regions, it's a tricky place to be. If you're in a hot Midwest city, maybe you can be optimistic. But Austin, Dallas, or Houston, some folks are pulling listings or renting out instead of accepting lowball offers. The gap between have and have not metros keeps widening.
So let's talk deals. For the first time in ages, we're seeing sellers actually entertain offers below asking price. It's making negotiation a thing again, and there's more room for creative deals, right?
Absolutely. I just helped a client in Nassau County knock $25,000 off a home's list price. No way that had happened back in the 2021 madness. You'd pay over, ask, or lose out. Now sellers realize the longer they wait, the less they're likely to get. Plus, buyers are reading reports and coming in expecting to bargain.
And mortgage rates, let's not forget. The 30-year fix dropped to around 6.35% recently. Not record low, but a whole lot better than where we were. More buyers are coming back, but it doesn't sound like everyone's gung-ho just yet.
Yeah, buyers are still being cautious. Like Redfin's economist said, it's enough of a drop to get people looking again, but it's not causing a stampede. Most folks are waiting to see if rates fall even further before they make a move. The vibe is, well, let's explore, but we're not desperate. Pending sales actually dropped again last month. People are taking their time.
So to wrap it up, the market's not crashing, it's just resetting. Sellers need to meet buyers halfway, and buyers, well, they get to test their negotiating skills again. We're in this real-time experiment now as the whole system tries to find its balance. It's kind of exciting, to be honest.
Yeah, the power dynamics shifted, and as long as rates don't do anything wild, buyers probably have the upper hand well into next year, maybe even 2026. We'll keep watching it because who knows where the next surprise pops up.
All right, that's all from us today. Thanks for tuning in to Nadland Forum Podcast Daily. Lior, always a pleasure to have your insights.
Same to you, Ruby. Have a great week, everyone, and don't miss our next episode.
See you next time.